Okay, so welcome to the sudden podcast. Like this is not really planned. It's something that I was thinking of doing this, but I just doesn't seem to have enough time, spare moment to do this. But since for today I suddenly have some spare time, right? I decide to do it. But this session will be recorded anyway for those who missed it, and actually for even those who are here and you want to like take a look at it again, the video will be uploaded on Patreon. It's actually on my YouTube also. So all these videos, webinar, podcasts, right? They are all on my YouTube, but of course they are private videos. So only those with the correct tier level, right? They will have access to this video. For example, the $40 folks have webinar. So all the webinar video, right? Although it's on YouTube, it is made private and it is only accessible to all those with the $40 lah. Okay, so the purpose of today's discussion is to sort of go through what makes a profitable trader and what are those traders that is just out to gamble. They just want a quick win. This is actually triggered by two things. Number one is all the GameStop and BlackBerry and Wall Street bet, all these things that's going on. I don't want people to get led astray by all these so-called, I will consider them as bets, as the Reddit channel itself say Wall Street bets. These are bets, these are not trades. So for bets, right, I will consider in them as the same category as lottery. Like you win a lottery, you win big amount of money, and then that's it. You are never going to play the lottery again. You will quit while you are ahead. So that's one thing that trigger me to come up with this webinar so that everyone's remain on track. And secondly, the second thing that triggers is recently for the past 2-3 weeks, market have been relatively quiet. The market is by no means bad or it is going to crash or it is like dropping severely. It is still in a relatively healthy state. It is just diving a bit, it is just retracing a bit. But it seems that this retrace has been triggering a lot of people to panic and like or a lot of people shouting shots lah, this and that, right? So once again, I want to make sure that everyone is well aware of what is going on and what as a disciplined trader you have to do during this kind of moments, because we are living in a technological information age right now. We have access to Facebook forums, Telegram. There will be no lacks of abundance of information out there, and as a trader, sometimes as a new trader, you tend to get overwhelmed by all these, especially if you do not have your own trade plan, if you do not have your own strategy, you do not know how to follow all your own strategy, right? You tend to get lost and end up you will start to lose more money following people rather than um, making money lah. That actually includes myself. For example, if you are blindly following me, right, you're probably gonna end up lose some money also, which is why my trades, all my trade setup that you see, unlike a lot of other analysis out there, right? My trade setup focus on one thing, that is the stop loss. I don't really focus on profit. I don't really focus on entry. I don't care where you enter or what. I don't care how you take profit. But one thing you must follow at all costs is the stop loss. So it goes both way. If price doesn't hit the stop loss, you do not exit. And also, if price does hit the stop loss, you must exit at all costs. Doesn't matter market recovering lah, this lah, that lah, the candle recover, all this nonsense doesn't matter. You must exit at all costs. So with all this said, right? Let's continue to the proper podcast lah. Forgive me if it's a bit noisy. I'm outside the balcony, so there's a lot, and I'm living right near the road lah, so there's a lot of traffic. Okay, so number one, actually what you see here on the screen, right, is the Nimbus Capital report card. So this is the report card that my course trainee will get. So currently my first batch of my course, right, from last year, they are about to end soon. So when they finish their course, right, I will give them a report card based on how they perform with their trades. So they are doing a lot of live trades right now. They then with their live trades, right, I will have their trade data. From their trade data, I will do some analysis, I will do some statistical calculation, and I will come up with a report card to sort of determine how well are they doing, and if they are able to go off independently, as in they no longer need my guardians, they no longer need me to coach, they are good on their own. So this is actually the report card lah. So the report card is not part of our discussion today. I was just looking at it, then it just happened to be on the screen lah. So I just want to share only. But there will be one small tiny portion of the report card that I want to discuss, that is winning and loss, which is your hit rate lah, the hit rate of your trade. How many of your trades are actually winning trades, and how many of your trades are actually losing trade. So as you can see here, right, um, the the trader ID, the name is I purposely put a trader ID instead of the name in order to protect the name of the person lah. I mean, to respect their privacy lah. And so this person, right, this trader, he or she have a winning rate of 67.5%. So now you all can type in the chat window, right? Do you think 67.5% is a very good winning rate? So don't look at all the other expectancy or what. Don't look at the risk reward ratio. Let's not talk about risk reward ratio, but just winning and winning losing alone. Because if you are following the Nimbus Capital trading style, right, you do know that I don't purposely take profit at 1-2 pip profit like that, then it's already to sort of pump up my winning rate. No, we don't do that. So the trader here is actually following the Nimbus trading pattern lah, which you can see the profit is actually quite far off. So this trader has a profit winning hit rate of 67.5%. Do you think that 67.5% is considered high winning rate? Who think is high? Who think is very low? If you think it's high, right, just type yes. Or if you think it's low, right, then type no. Average, okay, yes. Vincent, as I mentioned, let's not talk about win-loss ratio, just the winning losing rate alone. Yes, a lot. Okay, okay, no, okay. Okay, yes. Yes. Okay, so I guess majority will say yes. And let's say, what if I tell you that, what about 75% winning rate? Do you think 75% winning rate is a lot? If yes, then type yes. If no, then type no. We are just talking about winning rate. Let's not talk about, once again, let's don't talk about stop loss and TP ratio. Yes, it's a very high winning rate. Okay. Yes. Okay, so most will agree that 75% is a very high winning rate. And in fact, it is a very high winning rate. So for example, I have a coin. Let's say I have a coin and I flip the coin, right? And I tell you that this coin has 75% to be hit and 25% will be tail. If I play a betting game with you, right, no matter what, you will always be picking hit because it has a 75% winning rate. But let me ask you, even though this coin has 75% winning rate, right, how many times do you think that it can land tail in a row? For example, can it land 2 tail in a row? Can it land 3 tail in a row? Can it land 4 tail in a row? How many times do you think the consecutive tails it can land? Like 3 times, 4 times, 5 times. Let's say I flip the coin. I flip the coin 1,000 times lah. Let's say I flip the coin 1,000 times, right? How many consecutive tail that? How many consecutive tail can I get? Is it 3 consecutive tail, 4 consecutive tail? From this simple percentage alone. Just type out. Okay, 2 to 3. In 1,000 flip. In 1,000 flip. Any more? Like just a random guess. I think 3 max unless no wash hand. Okay. 5. Okay. 5, okay, 5. Any more? 3, 3. Less than 250. No. I'm not talking about total number of tail. I'm talking about consecutive tails. For example, you will get tail, 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 tail. Then maybe that is 4 tail. Then after that, you will become head again. So consecutive tail lah. Maybe you'll get in total 250 tail around there. But rather, I'm talking about consecutive tails. So there were people that say you can get 3 consecutive tail, the maximum number of consecutive tail. For example, with this percentage, right, it is impossible for you to get 100 tails in a row. That's definitely impossible. So what is the number that you think the maximum possible of consecutive tails? So we have 3 and 5 already. Are there any more? Give you all 1 minute. 3.9. Where you get that 3.9? How come it's a percentage? Is a whole number? How can you get a 3.9? Okay, since not much answer already, right? So the correct answer, there's actually a correct answer. 8 is really sway. Okay, true. 8 is really sway. So there is actually a correct answer to this. That is provided that of course your coin is really 75-25 lah. There is let's not include those funny situation where the more you flip, right, the more material get chipped off and then it changes the percentage like that or what. Let's not talk about that, but let's say that it will remain 75-25 at all times, right? And I keep flipping. There is a calculation that statistical calculation you can do to calculate the maximum consecutive tails that you can get given this percentage lah. And the Excel calculation is actually very quite complicated. So I'm not going to go through here, but let's review the correct answer. If you have a 75% chance of hit, right, the chances of you getting five tails in a row, 5 tails is actually 52%, which is a very quite high. So this is the assumption that we take 1,000 trade. So if your trading system have a 75% win rate, right, and you make 1,000 trade, there is 52% chance of you getting 5 losing trade in a row. What does this number actually mean? It means that backtrack a bit. Number one thing that I will assume with everyone is trading is not a lottery. Okay, so trading is a lifelong thing. You are going to trade for probably as long as you are not retired yet, or even if you retire, you probably just want to trade for fun. So trading is not a lottery. What do I mean by that is, for example, let's say you strike Toto, right? You win 1 million, right? You probably take that 1 million and just call it quit lah. You probably won't want to buy Toto again. So but trading, right? It is not as if one day you make some profit and then you just stop trading altogether because you don't want to lose again, unless of course you are one of the very lucky few that like don't know make a very big winning trade in GameStop, that kind of thing, right? But those are outlier rather than majority of the trader lah. So let's not talk about the outlier. So 1,000 trade, right? Let's say if you make about 200 trades per year, 1,000 trades is actually 5 years lah. Or if you make 150 trades a year, right? 1,000 trade is about 7 years like that. So it is about 7 years worth of trading data lah. And let's say your hit rate is 75%, right? Within that 7 years, there's actually a 52% chance of you losing 5 trades in a row. So why is this number very important? So let's say you risk 10% of your portfolio per trade, which is very high, very high. Let's say you risk 10% of your portfolio per trade, right? With this kind of win rate, right? At some point, right, there's actually a chance for you to lose 5 trades in a row where you will lose like probably 50% of your entire account, even though you have a 75% chance win rate. So that is very important, because if you lose 50% of your whole account in this kind of, in the scenario of this back-to-back losers happen, right? then it's very, very hard for you to recover. Even if you have a 75% chance win rate, right? It's very hard for you to recover from that loss lah. Because in order to, if you lose 50% of your account, in order to make it back, right, you essentially need to double your account, which is not a very easy thing to do, even with a 75% win rate. And that's the point that I'm driving. No matter what kind of trading strategy you have, right? If you don't manage your risk per position, let's call it RPP, risk per position, even with a very successful system, at some point in your life, probably once you hit that 1,000 trading hit rate, right, you are going to encounter that consecutive losing trade, and you will lose your maybe probably 30-40% of your account. So number one, right? Number one, what does profitable trader do is that they don't get cocky with their win rate. No matter how good is their win rate, right? They will make sure that uh, even when they encounter back-to-back losing trade, their account is still they still retain most of their account lah. Hence, for those who are in my 20% tier or $20 tier or $40 tier, there will be one introductory post that tells you that you can at most take 5%. If you are taking more than 5% risk per trade, right, you are risking a lot already. And this is for a trading system with 75% winning rate. What if of course, I mean, the worst I lost was I've lost 7 trades in a row before. I think there was one time I lost like 8 trades in a row, back to back. My winning percentage isn't so high. I think my profile is about maybe 65%, 66%. My so-called hit rate profile lah. But the thing is, when I trade, right, I only risk 1%. Sometimes I risk 0.5%. Because my trading account is 100K, so 1% is like maybe $1,000. So, or sometimes certain trades I risk only $500. So it depends on your account also lah. So because if you have a larger account, right, you can definitely trade more, and you can earn more lah, because it's a larger account. But for those who are with like 10K account, right, 10K is a very, very low account, I would say. And once you start to make lose in a row, right, the worst, another thing that can cause you to be make things worse for you is your commission cost. If your commission is like $10, $25, all your losing trade, it will compound one. So it's very, very important that you keep your loss lah. You keep your risk to a maximum of 5%. So this is the number one rule that I follow. Even for me, I'm take very, very very less risk one. I very scared die one. I only take 1% risk. At most I will take 3%, but never more than 3%. And this is for a account with 75% win rate. How many of you do actually have 75% win rate in 1,000 trade? Maybe yes, 5% is a lot. But that's the highest you can go lah. But normally I will not recommend more than 3. Uh, so for 1,000 trade, right, in order to get 75% win rate, is actually a very, very good trading system. And let's say for most of you all, right, I don't think most trader can hit this kind, unless it is those that scout 1 or 2 pip of profit. Then when the losing trade come, right, it's like maybe 10-20% of their loss gone lah. So that is another issue altogether. So let's just assume that we have a 1-to-1 TP stop loss ratio lah, for simplicity's sake. So even with a 1-to-1, right, you will realize that 75% is actually a lot. Most will fall between 60 to 65 like that. So if you are at 60 to 65, right, let's look back at my one of my training report card. So this trader, he or she has 67.5% winning rate. And what you can see here in the risk of consecutive loss is that this trader have 92% chance to encounter 5 losing trade, meaning confirm guarantee chop at some point will get 5 losing trade back to back. But because this trader takes only 1.2% risk per position, right? This, whenever the trader encounter this he or she is going to probably only lose like 6% of his entire portfolio lah. Hence, the risk grading here was given A to that person because he or she is having a very risk adverse lah. Okay, so number one to be a good trader, just because you have a very high hit rate doesn't mean you go and like go and risk 10%, 20% of your portfolio like that. It is very easy. Like you can give me your past 10 trade, I can tell you how much you are risking from your trades lah. So this report is actually taken from the past 40 trade of this person. Okay, so number one, risk is very important. And number two, right? Number two is a continuation. Let's look at this. So you have trader one and trader two. Okay, trader one and trader two, and both traders start with $10,000. So this is your capital. Both trader one and trader two start with 10,000 capital. So they take the exact same trade. So this is trade one, then trade two, trade three, trade four, trade five. Okay, they take the exact same trade. They went in the exact same counter. They same entry, everything. But trader one, right? Trader one never stop loss properly. So trader one not very disciplined in taking stop loss. So he risks a lot. He risks 10%. Then sometimes he risks 15%. 15%. Then after so because they take the same trade, right? For the first four trade they make they lose lah. And the fifth trade they managed to get a very good counter. They got 25. They managed to get 25% profit lah. So for this, right? Let's say for trader one, this trader risks a lot, never consider his risk per position, everything, right? So when he lose the first four trade, right, what you realize is that his account from 10K become 9K, then become 760, then becomes 6503, then becomes 6177. So when he finally hit that big winning trade, where he gained 25% profit, right, his accounts only jump back to 7722, not even his initial capital. But trader two, this trader two is very disciplined in his risk. He always cut at 2%. Every time 2% risk ready, he's out. So what happened is, for the first four trade, right, that he lose 2%, right, he only lose a bit. But at the final trade, that profit, right, assume that both trader enter the same stock, enter the same entry, exit at the same price, get the same number of winning percentage. But what happened is, this trader, because he lost so much, right, he didn't really have enough capital, and he couldn't take full advantage of that big winning trade. End up he only get back to like 7722. Whereas the trader two, who is very disciplined in his risk, right, he managed to get until 11530. So you can see that the difference between these two are actually is $4,000. $4,000 difference. Meaning for trader one, right, if he have taken proper risk, right, he or she is going to be up $4,000 instead of what he have right now, which is 7722. So $4,000 is actually 50%. You know, he could have gotten like 50% more than what he have now if he had simply take lesser risk. So this is very important because most of you think that risk is just make sure I don't lose a lot, make sure I don't lose a lot. No, it's not just making sure you don't lose a lot. It makes sure that when a big profit come, you have enough capital to take advantage of it, which is why I say, if you lose 50% of your 10K, you are only left with 5K. And let's say you have, 5K. Let's say you have a very strong, powerful winning trade that doubles your account, right? At most, you come back to 10K. But let's say if you are trader two, you discipline a lot, and let's say you lose, you probably only lose until 9K. Then you have that same powerful winning trade that comes along and double your account, right? You have 18K. So the only difference between trader one and trader two is one risk a lot, one risk lesser. Both of them manage to hold their profit. But even though both of them manage to hold their profit, right? Actually, trader two comes out much higher than trader one. Okay, so secondly, risk is not just a way to limit your loss. It is actually the most powerful profit-making tool. So I think this is something that no one will sort of enlighten you, and it is one of the things that I teach my course at the very beginning of the course. They have been drilled this, and because of that, right? I this one is just a simple explanation, you know. For my course, right? I give them real exact live data of what goes on between trader one and trader two, and they can see that actually just by taking care of the risk alone, towards 1,000 trade, right? Trader one at the end of 1,000 trade, provided that both take the same trade, trader one not disciplined loss, but trader two is very disciplined, right? Suppose assuming both of them take the same trade, trader one at the end of 1,000 trade, he end up in like $8,000, whereas the trader two, he end up in like about 120K like that. So it's a very huge difference. And the more you trade, the longer you trade, right? All these mistakes will start to compound and trader two will shoot up way ahead. So for example, let's say the next winning trade, another very big winning trade, you get 30%. Both get 30%. So what happened on trade six? So 30%, you have this multiply over 100 times 30. Oops, what did I write? What did I do wrong? Oh, sorry. This one should be plus. Okay, so okay, 30%, very lucky. So now trader one is back to break even lah, 10K and $38. Whereas trader two, so this one up 5K already. This one already up 5K already. Just now it was like 4K difference, right? Now this guy is up 5K. So let's say in the next time trade, lose again, right? Maybe trader one will lose back below to 10K again because he or she is not disciplined, but perhaps trader two probably only lose until like 14K like that. So I do hope that you get this message across. Okay, next thing what I want to share is also, let's look at the current chart. Let's look at some of the trade setup, and I want you all to really um sort of how should I put it, understand why I emphasize on stop loss a lot. Those in my $40 webinar, they should be very clear of this message already, because every time during webinar, right, I'll always nag until so for the $40 folks here, I apologize in advance if you have to listen to this. You have to listen to the nag again lah. Melvin, it is 2% of your total position per trade. So every one trade you take, the risk is 2% of your total position. Okay, so let's say I have this chart. Keep up with the nagging. Okay lah, sometimes nag too much, later everyone unsubscribe then die. Okay, so let's say I have this chart. Let's say I have this chart. Let me remove this. So let's start from here. Okay, so this is Lion OCBC SCT HS tag. So this is the Hong Kong tag chart. So most of you will know that I actually call for a long position on this chart sometime here like that. I remember should be this candle, and we actually hit the TP here lah. I want to emphasize a few things with this chart. So let's say I give a call right now. Let's say I give a call right now. I say enter here. Okay, let's enter here. Possible entry. Okay, and then I give a stop loss here. Okay, okay lah. Let's not talk about stop loss first. Let's say my TP is like here, 1.8. 1 point. Okay, so this is my TP. So I make this call. So this kind of call is what most people will make lah. Enter here, TP there, but we never really talk about stop loss. So let's say imagine you are a person taking this trade, So what if? So there are a few ways that this trade can go. Number one, the most sort of very direct way is that the next day the price just go all the way up and TP straight here. Okay, so that's the number one way that the trade can go. So for most trader, right, for many of the trader, right, they can only profit if this happen, because the moment they enter already, right, when someone makes a call, right, someone makes say can buy, right, they can only make the profit if this happen, because they expect the thing to go up straight to TP, like one straight line like that. But unfortunately, in the trading world, right, whatever happen beyond the trade call, you can't really predict, mainly because it's in the future. No matter what strategy you use, no matter what technical lah, Elliott wave lah, fundamental lah, perhaps it can go up there, but it cannot straight away go up like that. I mean, it's not that it cannot, it can, but you cannot predict how it will go up to your TP. But the thing is, most traders expect this kind of price movement. Then the next day drop a bit, a lot of people panic. So the thing is, this is I would say, is the so-called the most people, what most people expect lah. And the thing is, the thing is, I have the data for you. I can tell you right now, in my trade setup, right, in my trade setup, more often than not, let me just show you trades. So most of you will have access to this. So let's look at the, oops, sorry, let's look at this column, the number of days that it takes to TP lah. So there's one that immediately hit the next day, this one 5 days. So let's look at all those that take less than 5 days lah, or 5 days or less. So I have 1, 2, then I have 3, 4, 5, 6, 7, 8. So I have 8 trades that hit TP in less than 5 days. And currently I have 32 trades open. So 8 out of 32, right? Yeah, let me do a quick calculation. 8 divided by 32 times 100. It's actually 25%. So I have 25% of my trade setup that actually hits TP within less than 5 days. So this one is, of course, I have only 32 trade data lah, but actually if I look at my trade over 100 trades, right, the percentage of my trades hitting TP within 5 days is about 15% like that. I can say with very good confidence that it is about 12 to 15% like that. So if you can only profit from this kind of trade, and some can't even wait 5 days, some within 2-3 days like panic already. So if you can only profit from trades that immediately, like, or within a short period of time hit the TP, you are only going to profit 15% of the time. Meaning, even if my trading strategy is very, very high profitable hit rate, right, you are only going to profit from that 15%. Mainly because every time it drop, right, you scared and then you are out already. So as a trader, you must be able to hold when the trade does this. You must be able to hold when the trade does this. So if this happens, is this trade valid? Is this trade call valid? So I will say that this is a very valid trade call, because it retraces a bit, but eventually it is still in a uptrend, and it still hit the TP. So how about this kind of trade? Sorry, how about this kind of trade? Is this a valid trade? So of the 3 trade, right, I would say that all 3s are considered valid trade, because eventually it hit the TP. But the thing is, 15% 15% of the trades only belong to this category. The other 65% is in, sorry, I feel my max. The other 85% is actually this, the later the 2 scenario. So if you are those trader that want immediate TP, meaning you are only going to get profit only 15% of my trade call only. The other 85% you are going to miss. Hence the important thing here. Hence the important thing here. Yeah, let me just put this line, right. So what is the main thing that let you earn the profit when trade goes like this, or when it does this? Sorry, let me draw again. Okay, so within these two scenario, right, what is the main important thing that will ensure you get this trade? Make sure you don't get stop out and you get the TP eventually. What do you think is the main criteria? What is the main thing that is making you hold this trade? I don't hold a trade because, oh, I feel confident. Oh, that analysis, the fundamental thing, I can hold this or that, because I'm a 100% technical trader. All my trade setup, I don't look at fundamental, zero fundamental. Sometimes I trade something I don't even know what that company is doing until someone comes and like share some fundamental news with me, like, hey Zo, I saw your trade call. Is it because of this? And then I'll be like, huh? Like what? No, I don't even read the news. Like even for the BlackBerry trade setup that I told, it was only after the trade setup someone text me and say, hey, you read Wall Street Bet also? Then I'm like, huh? What Wall Street Bet? But sorry, I sidetracked a bit. So for this, right, in order for you to make money on this trade, right, the thing that is keeping you in the trade, right, is actually your stop loss. Is actually your stop loss. So as long as never hit the stop loss, right, as long as you stay in the trade, then you will actually get this profit. So if you are those that don't follow my stop loss, like drop a bit scared already, then you are only going to get 15% of my winning trades. You are not going to get the other 85%. So here, right, here comes the second so-called the mind-blown question. The mind-blown thing is the stop loss here, right? It is not actually your risk. It is not actually to limit your risk. The stop loss here is actually to keep you in the trade and you can get the profit. This is very important because a lot of people, when I ask them stop loss, they're like, stop loss, what? Stop loss, yeah, to cut my loss, cut my loss. So actually, no, stop loss is not there to cut your loss. Stop loss is to ensure that you are in the trade. And when it finally goes up, right, you can catch the profit. So imagine this scenario. Let's do this again. Suppose you, sorry, give me a minute. Okay, suppose, let's say, suppose if you hit the stop loss, right, you are going to lose $400. Suppose you hit the TP, you are going to get $600. Okay, so only 15% of the time you'll get the $600. So the other 85% you are going to get the $600 straight out. The other 85% of the time, right, you do need to wait. But let's say if you don't wait and you just go and like prematurely cut the loss, right? Cut the loss at, let's say you lose 200 already, then you cannot tahan, so you cut the loss at $200. So what you end up is you end up with a minus $200. But let's say eventually the price go up and hit, right? You could have gotten $600. So here, right, the swing is actually you didn't lose 200, you didn't miss 600, you actually lost $800. You actually lost $800 on this trade, and this is, I can tell you, this is far more detrimental to all your trade than when the price actually hit the loss and you lose $400. Here you lost $400, then that's it already. But in that earlier scenario, you actually lost $800. That's like twice the amount of this stop loss. It is almost equivalent to losing 2 trades in a row. And as a trader, right, you need to prevent yourself from making this kind of mistake. And for those of you who trade, and you never look back at your losing trade, right? You like trade, then stop loss ready, out ready, cut ready, and then you just like keep chasing another trade, but you don't review back your losing trade. If you look back, right, you can actually ask yourself how many potential profit you could have gotten if you have followed your stop loss, or if you have followed the stop loss that I have given. So in this case here, the stop loss is there not to limit your loss. It is there to make sure that you don't end up with this losing $800 trade. So this one is also very important. So now the next important thing is you think back the first thing that I've told you here. Risk only 2%. Second, you think back what I tell you just now. Don't cut when you never hit stop loss. So let's say your stop loss is here, entry is here. You make sure that whatever you enter is 2% risk. So if your entry is here, price hit stop loss, right? Make sure it's 2%. So when you do this, you are following this rule. You are also following this rule. And I can tell you just these two alone, it will make you a far better trader than anyone else. It will make you immune from almost every kind of external factor. You want to follow GameStop? Can follow GameStop. Make sure you stick to this rule. You want to follow whoever don't know call what trade? Can you go and follow whatever, but you must stick to this rule. So here's come the third most crucial question. Hey, who's drawing? Don't draw. So here comes the most important question. So where should the stop loss be? So as I say, right, let's say what if my stop loss is here and price actually hit my stop loss and then continue to go up. So actually here, I follow the stop loss, I follow everything, I follow all the rule, but I get stop out. I get stop out. So here the thing is, here is that you need to be very proficient in setting your stop loss. You must be very proficient in knowing where to set your stop loss. Hence, in my course, right, the strategy that I give is a stop loss strategy, not entry strategy. As long as you set the correct stop loss, right, I don't care you enter here, or here, or wherever, I don't care. As long as you enter somewhere can ready, but your stop loss must be placed correctly. And what's the best thing about this kind of trading method? It is you can control your stop loss. You can actually control where you want to set your stop loss. You cannot control where your entry will be, because maybe you want to enter here but price doesn't come down or what. It's out of your control. But stop loss is perfectly within 100% of your control. The risk of 2% is perfectly within your control. Hence, you should make these two the most important core aspect of your strategy, rather than thinking where to stop loss, where to TP, or all these are not really very crucial, but rather your stop loss is crucial. Unfortunately, the stop loss strategy is something that cannot be revealed, of course, because it is the core concept of my trading course lah. But for the $20 and above, right? The 10, I don't know how many $10 folks are here lah, but for the $20 and above, right? You have access to all the trade setup. The trade setup, there's a stop loss there. So as long as you follow the stop loss, most of the time you are fine. So I say most of the time because I cannot say that my strategy is 100% perfect. There will be times I set a stop loss there, price come down, hit the stop loss, and continue to go back up. This kind of stuff happens in my trade also, but the key thing is they cannot happen all the time. So I have the data, I can tell you, in 100 trades, right, this kind of trade happens only 2 times. Like maybe maybe two or maximum 5 lah. So far last year, right, I only encountered 2 trades that occur like this, where it hit my stop loss and it goes all the way up. And that is number one. Wait, let me pull out those. Number one is Smile Direct Club. I posted this trade setup. So the stop loss was here. It actually hit. In fact, it barely hits. It touch and go. And then eventually hit the TP somewhere there lah. So this is one instance that it happens. Second instance was Sprout Social. I think for Sprout Social, it was somewhere here, I think. I forgot already, but I think it was somewhere here. So it actually like next few days touched, then after that it went all the way up already. So there are cases where my trade setup, things like this happen. I mean, I like I say, I do not presume my stop loss to be at the perfect area where it won't touch and then bounce back, right? No, I do have cases where I will get into this kind of scenario. But the thing is, as long as this kind of trades, it doesn't happen a lot. Maybe in 100 trades, if it happen less than 5 times, right, it's actually okay. I mean, you cannot simply just uh widen your stop loss for all of your trades, then you end up losing a lot of your money, a lot of money instead lah. So there have to be a balance. And my trade system itself is been tuned over like 3-4 years. I have found it to be at the level where I believe that it is balanced enough that I don't need to have such a wide stop loss all the way until like here like that. Of course, if you set there, none of your trade will hit stop loss lah, but you end up losing a lot of money. But also in a balanced way where okay, maybe there will be a few times that it will hit my stop loss and go up, or if those 1 or 2 times, then I'll just let it be. But as long as the other like 95% of the time, right, it is not hitting the stop loss, right, then I believe that is a sufficient successful system in my view lah. So I can give you one other scenario where it didn't hit my stop loss, but it went on to hit the TP. That is, I believe you all should know also, is Raffles Medical. So Raffles Medical is actually there are a lot of other counters also lah, but the only thing that is in my head right now was Raffles Medical. I believe the stop loss was somewhere here, 825. Like it almost barely touches and then it goes all the way up and hit the TP there. Okay, so it's very very important to stick to your stop loss, and from now on, right, going forward, right, whenever you want to enter a trade, right, always think from the stop loss perspective. So thinking from stop loss perspective is not really limiting your loss, but rather maximizing your profit. Make sure you are not kicked out of the trade before it hit your TP. So once you can think from that point of view, right, your entry no longer matters. You don't really need to care where you enter, and you will realize that you will keep hitting your profit as long as you are disciplined enough. Okay, and lastly, the last point I want to go through, let's look at the current S&P 500 lah. So I'm gonna just use S&P 500 as a like a default market to represent everything. So you can see that recently, right, market dropped just a bit. Okay, it dropped a bit only, and because it dropped, because it dropped just this bit, right, a lot of people are panicking lah, like how come market rate lah, this lah, that lah, like don't know, this crash, that crash. But if you look at it on a very huge trend, right, if you can look at it on a very huge trend, this drop is actually almost negligible. Even in this uptrend, right, this one is far more steep. This one also very steep. But along the way, you have very tiny drop like this. Okay. So in an uptrend, right, in an uptrend, there will be this kind of drop. So as a trader, right, if you cannot hold your position in this kind of drop, then most likely is that you will not be able to catch the whole big trend. So if number one, if you face this kind of retracement and then you end up exiting your position because it started showing a lot of red lah, you very scared lah, or you don't want to lose a lot lah, it shows one thing. It shows that you are entering more than what you can handle, or you are entering too much position, or you are entering too many lots. And it is good to lessen your lot size a bit. And the lot size, of course, as I mentioned earlier, it should be 3% risk per position. If you do that, right, then you are perfectly fine lah. So in an uptrend, right, in an uptrend like this, right, if you all saw my Facebook post, I can tell you that I can really honestly tell you that no matter what strategy you use, you will get winning trades. No matter what strategy you use. So you use moving average lah, stochastic lah, RSI lah, Elliott wave lah. No matter what, right, you will always be able to get some winning trade. But the thing is, the important points that is going to separate the winner from the loser, right? The profitable one from all the gamblers, right? Is very is basically comes down to money management, your trade management, not your entry strategy or whatever, but rather how you manage your trade. For example, if you are the kind of trader that whenever you make a loss, right? Whenever you make a loss, you always hesitant to cut. You always hold your loss, never follow your stop loss. You never follow the 2% risk, 3% risk. And sometimes your lot sizing, right? One day you enter like 200 shares, the other day you enter like 1,000 shares, like your lot sizing also all over the place. I mean, let's not talk about penny stock versus like blue chip stock. Like penny stock, maybe 20 cents you can enter like 100,000 shares. Then blue chip maybe you can only enter like 5 shares. But let's say you are just playing the S&P 500 lah. Okay, so let's say you are just playing the S&P 500. One day you enter one contract, the other day you enter 20 contract. There's no discipline at all lah. So for all these kind of traders, right, what happened is that whenever they lose, right, their losing trades are very unpredictable. Something like this. Sometimes lose 10%, sometimes lose 15%, sometimes lose 5%. But whenever they win, right? What they do is just a bit of profit they run already. Just a bit of profit they run already. So they are not able to maximize their winning profit. And the thing is, like I said, in an uptrend, right, everyone will, regardless of what strategy you employ, right, most likely you are going to have a winning trade. But if you cannot hold your winning trade because you cut too early, because you enter too big, right? Then the thing is, within this uptrend, you probably cannot earn a lot. You'll be like earning a bit here and there. So while a good trader earn like 40% profit here, maybe the bad trader only earn like 10%, and the bad trader is very happy with the 10%. So when the retracement come, the good trader probably will probably encounter some losing trade. He or she might lose like 5%. Let's say if lose 5%, right, the good trader still have 35% profit lah. Then, but the losing trader, right, because he or she randomly plays a very big lot or what, and then end up losing maybe like 25%. So end up this guy is now down 15% already. So when the market rebound again, right? This bad trader, he is scared to take trades. He is scared to take trades really because he lost a lot. So he end up taking very small loss, very small shares. So when market start to recover, right, he only win like 1%, 2%, and then his win is not able to make up for his loss. But whereas the disciplined trader, this guy, right, he's probably able to recover everything, and not I mean, he's probably able to get a lot of winning position again, right? And he or she is going to maybe probably up another 35%, then end up in the end somewhere here, the good trader will probably get like 70% like that, and the bad trader probably like stuck at like 3-4% like that. So the thing is, assuming that both of these trader, we have come back to this, assuming that both of these trader take the exact same trade, but one trader never limit the loss, or one trader don't know how to hold on to the profit, but the other trader is able to, right? It doesn't matter if you enter the same trade or what. The thing that is going to separate these two is actually how you manage your trade, how you manage your profit, how you manage your risk. So it is the money management that is going to make the difference. Trade management and money management that is going to make the difference between the profitable and the non profitable one. So in my course, the Nimbus trading system, right? Not only I teach us what stock to choose and the scanner itself, but also how to manage all these things. And thus, the whole course is 3 months. Like, it is mainly because of that. Because if you want me to just give you the scanner, just tell you what to look out for in the scanner, right? I can tell you, I can do that within like one weekend, and I can simply do a like 2-day course instead of a 3-month course lah. So the whole purpose of the 3-month course is mainly just to, the first month teach all these money management, risk management. Second month teach the scanner and the trade setup. Third month you go out and trade. I watch you how you perform your trade. So that's why the course is 3 months long. But for those of you in the Patreon, right, what I want you all to think is that number one, stop loss. definitely must follow. Number two, TP. Your TP, right? As I say, you must be able to capitalize your winning position. So in the trade setup, I will give a TP level, but that TP level, right? A stop loss is very simple. Once hit ready cut, it's the same for everyone. But for TP, right, it's different for everyone. Hence, I cannot give you like what to do with your TP level. Or in fact, the TP strategy that I teach in my course is confidential, is meant for the course member only. So those who are using all the tricks, right, make sure you come up with a proper strategy for taking profit. Because what you notice is that there will be a lot of stocks once it hit the TP already, right, it will suddenly shoot all the way up once, still continue to go up. So for example, those who are, I'm not sure if anyone traded Vexa. What is Vexa? What is Vexa? Link charging workhorse there. Okay. So the trade setup was something like this. And currently it's going like cannot see where really. Of course, if you TP everything here, then you're not going to catch everything there lah. But the thing is, I cannot go and put my TP so high also. Then end up none of the trade will reach the TP already. So oh yeah, it's dropping like hell now lah. Okay. But there is a chance that it is going to go way higher than whatever the TP level is lah. So here's the thing. Here's a very safe strategy, that TP strategy, that I can sort of share with you. The thing is, whenever hit the TP, right, don't TP everything. So enter here, TP here. Once it hit the TP, right, don't take everything. Just take maybe 80% or 70% of your position. And you can trust that my hit rate is very high enough that even if you take 70% here, right, your risk reward ratio is not drastically affected. So the remaining 30, right, let's say you take 70% of your position profit, you have the remaining 30% there. Make sure that the remaining 30%, let's say if it comes back down, make sure you shift your stop loss to at least prevent yourself from taking any loss, or at least lock a bit of profit for that 30%. So if it continues to go up, you can still ride the trend. If it comes back down, you lock that profit, a bit of profit there, to make sure that you don't incur any loss. Okay, so there will be a lot of times where you enter TP, price hit the TP, take 70, come back down, you exit at break even. The remaining 30% you exit at break even. Does this situation happen a lot? Yes, it happens a lot, maybe like 20% of the time, but so be it. You just take it. But the other 40-50% of the time, right, it is going to go up some more, and you'll be able to catch the remaining one. So for the remaining portion, where should you start to take TP? So this is when you can take advantage of the TP2. So you can exit everything can exit the remaining 30 at TP2. But what if you think that it's going to go up even higher? Then you don't exit 30, you exit 20. Then the other 10 you will leave it there. And then you will ask, so what if the whole thing come down like that? Then you need to start asking yourself already how greedy you want to get. So there is no exact formula for every single situation out there. You really do need to come up with a proper TP strategy for yourself that you can follow, because the one that I teach my trainee is like I say, is confidential, but this is like an example, a groundwork that you can start off with. And hopefully with all this, right, number one, you will be able to limit your loss with the 2%, 3% risk per position rule. But the ultimate goal is not to limit your loss, but rather when the big winning trade come, right, you have enough capital to take advantage of that winning trade. Always remember this.